MMI Holdings is a South African-based financial services group with a market cap of around 33 billion rand, which was formed from the 2010 merger of Metropolitan and Momentum. The group provides long and short-term insurance, asset management, healthcare administration and employee benefits. MMI has a price-to-earnings ratio of 14 and a dividend yield of 8.6%. So that merger, Paul, doing quite well for MMI.
Yeah, so they hammered it all together. I understand they're kind of taking out costs and they've made some initial savings. Look, Momentum, a strong player in the market, big fat margins. That whole retirement industry management business is extremely profitable. I worry sometimes about how profitable it actually is. You know, people that come out of big corporates that end up with their pension scheme being administered by those people, they never seem to be all that happy, and they're not so happy with the financial results either. And I worry that it's got a lot to do with the cost burden that gets distributed out over there. But having said that, you know, 33 billion market cap, Metropolitan more a player in the lower sort of life and funeral area. So, you know, real organizational, operational strength and proper global, you know, sort of reach now across the country.
So looking at the African operations, they're in Namibia. So they've got quite an aggressive way of going into the African continent and as well as in Asia.
Yes, that's correct. Although it's relatively small still in their lives. And it's through the legacy Metropolitan operations that they are in Africa. So they'll probably try and build on that. But the key operations are still in South Africa, especially at the lower end for Metropolitan, the upper end for Momentum, and very different economics in those two markets. So Metropolitan doing very well at the lower end, Momentum not as well in the top end.
So Paul, what do you make of the African operations?
Yeah, look, I don't know. I'm more interested in how they're going to kind of emerge from the serial restructuring and reorganizing. You know, RMI has got a big stake in them. Then there's some assets which kind of were left out of the, in other words, the whole FirstRand RMB group insurance assets have been through quite a lot of change. And my normal experience is it takes a few years before the institutional market settles down and figures out who owns what and what kind of profitability you can expect, what kind of costs are going to be, you know, achieved in terms of synergies and all of that blah blah. So I think it could be one that gains a little bit of momentum in terms of the share price and the profits and also the share rating. For the moment, I think it's still a little bit of an unknown quantity. But for me, I'm not going to go hot in it either because I don't want that kind of exposure in the portfolio.
Looking at the share price, Jean-Pierre, what do you make of MMI? Do you own any of MMI stock?
We don't own any MMI stock at the moment. We did have a position in it. And I think the re-rating, the momentum that, excuse the pun, that Paul was talking about has now happened, trading up to its embedded value of around 20 Rand a share. Just paid a very nice special dividend as well. That's why the dividend yield is so high. But once again, we think with the lowest return on embedded value, all the capital being in cash, which is a lower returning asset, it is priced for where it should be. Not that much upside, so not hot for us.
So two not hots on MMI.